think we're about to rock and roll right about now. So, without further ado, let's start at wisebeyondbitcoin.com, our latest updated web page. Welcome to Wise Beyond Bitcoin. I'm Lucas.
And I'm Ryan.
And hey, we're here to give you a little midweek update. Anytime there's breaking news, we're here to kind of catch up and share the excitement with you. So, without further ado, of course, we've got our handy little website, and there's crypto metrics, and that's kind of what we like to start with. We kind of want to start with a little, how do you do on the market? How's the market doing? And that's why we're doing this update.
Yeah.
How is the market?
It's good to see green again, right? Not all a bunch of red. That's the first thing that jumps out at me.
Yeah.
Broadly, things are up. We're rebounding. There's a recovery, as it were, going on. It was a pretty steep correction Monday and then Tuesday with Bitcoin popping below 29. There was a key level of support that everybody was looking at around 29, and it briefly pierced it. And but we're bounced off that.
Almost 20%.
Almost 28, yeah.
Almost 20% in the last couple of days. Talk about, that's a strong bounce back, and even Ethereum bounced back a solid over 10%. A pretty good jump in the last couple of days. So, and not just Bitcoin, Ethereum, but it looks like the overall cryptocurrency market, the alts. Of course, Dogecoin took a major spill. So the bigger the fall, the more there is to regain position. But some good solid projects. Solana, Chainlink, Theta token 7% here in the last day. So Filecoin, you're right. In fact, might as well just go ahead and see what the top gainers are. And you see Filecoin, curved out token for the DeFi protocol. And look, basic attention token. We've been talking about BAT for a while, and I think that's going to be something to continue to follow down the road because they're working with the Brave browser, and they're making it basically to where not just a wallet, but like Uniswap and other liquidity aggregators, that everyone who uses their browser, that uses their wallet, will actually be able to add liquidity and join the BAT token ecosystem, as well as they've already been rewarding people with crypto using their Brave browser. If you lock in their Brave browser, you can literally be earning real cryptocurrency, redeemable in BAT, ETH, Bitcoin, Wrapped, whatever you want. So
that's a browser too. Even if you don't take advantage of the crypto game part, where you can choose to be paid for seeing a few ads, you can get BAT, paid out. But you can also not do that and just use it as a browser, and it's great. It blocks so many trackers and ads and just all kinds of things that are buried within websites that you're loading, and it's taking up bandwidth, and it's doing and selling your data to some third party, and you can block a lot of that and really clean up your browsing experience. Pages load faster. Brave is really the best browser I've ever used.
Actually, I've been using it this whole time. There's a little line right there. If you don't know, we're using the Brave right now. So, and you're absolutely right. I before they started doing the BAT rewards, I've been benefiting from the Brave browser experience. I really enjoy it. Now, I'm also enjoying looking at a lot of these solid projects. You mentioned Filecoin. There's Solana. IOTA's been around for a while. The Graph, which does a lot of work for providing information for a lot of DeFi and Ethereum-based protocols. So it's a very integral part of the DeFi ecosystem. Tezos is another old school project that's got some solid computational power behind it, and they're doing some great work in the DeFi and crypto space. So, there's some, of course, look, Pancake Swap and Binance, Harmony, 8%, 9%, 10%. So we're looking at, when you look at 18, 20%, 50% rebound in the alt market, coming right off of a 10, 15, 20% rebound on Bitcoin, Ethereum, that's definitely, I would say, a solid pushback.
Yeah, it's encouraging. It's showing you that this sell-off correction period is not the same as the one we lived through, and when Bitcoin had rallied to 20,000 and then dumped, and it just felt like there was a year and a half or 2 years where it was just constant losses, pretty much. the big news was everything was pushing down lower, and it seems like that's not the same story playing out here.
I would
There's
I would say, look, obviously, is this the bottom? Who knows? Bitcoin could definitely go further. Ethereum could go further down, and they could do another quick correction. But when I see this kind of bounce back and these support levels and this resistance, it just goes, like you said, the excitement, the range. We're going to talk about the range that Bitcoin is basically openly expected to be trading in the crypto market in general. So looking at these higher ranges, that's really the stage for a higher plateau in the future, for a higher top. And that's the way I like to look at long term. We look at long term macro, fundamental, economic. This is not trade. We're not into trading, leverage trading, or any kind of financial advice. This is more just looking at the value, the economic impact. And I would just say this: if you're looking at long term fundamentals, and you know that Bitcoin was at 60,000 not that long ago, we're at almost 50% its previous all time high in a relatively bullish market. You look at Ethereum, which has been at $4,300, it's under 50% of its previous all time high. Could they go down a little bit further? Sure, they could. But how much further do I anticipate they will be correcting before they return?
and the point you like to always make is that Bitcoin's at that high level prior to the recent upgrade that it experienced with smart contract uh, uh,
Taproot.
operability and Taproot,
Right.
and then Ethereum was at those high levels with extraordinarily high gas fees, right,
Right.
prior to the London upgrade and the various
The Berlin
EIP
hard fork
upgrades.
and the EIP
Yeah.
1599, upgrades.
So it's not all else equal here. We're actually looking at projects that are developing and becoming better versions of themselves, right? So they should. There's no reason why why they shouldn't have another pump, why this isn't going to continue to play out, why the network isn't going to build, and why this isn't still early. Like as we always say, this is still really early in this space.
Good. And you know what? That's actually, to that point, Ryan. That's actually the perfect segue, and we'll make it quick, and then we'll go right into the main topics we want to talk about, the exciting economic impact of crypto. But with that, let's talk about what are the other institutions doing right now. I mean, we talk about, is this a good time to get in? I mean, right now, blockchain capital, which has been one of the leading investment companies in cryptocurrency for the last several years, has just collaborated with PayPal and Visa on June 22nd, just in the last day, and they've raised over $300 million in investment to support development in crypto. Now, it's not just PayPal and Visa. We're talking about strategic investors, pension funds, major university endowments, family offices. So we're looking at the real traditional financial sector now looking at becoming involved in the
Right.
blockchain and cryptocurrency. That's what this is. Are you pension funds, university endowments, family offices? These are your
These are your more conservative oriented financial plans, right? For pension funds, I know that it's notorious that they've been in bonds and other very secure investments that would pay like a kind of a guaranteed interest rate or return, right? And the fact that we've been living in this extraordinary zero interest rate world for the last decade, we're not zero, but close to, it's kind of it's squeezed the pension funds, and they're not able to they're not getting yield through those traditionally conservative uh, products they're used to. So I guess what we're seeing is that they're seeing opportunity in DeFi and in crypto that and that's notable because like we always like just to reiterate, these are people who are used to conservative approaches. These are not folks who want to tie up pension investments in really super risky fly by night investments like penny stocks or anything like that. This is when you want to. These are the people that buy into things. They have a mentality of looking at the future, what's going to be big, 10, 20 years down the road, kind of a Warren Buffett mentality. So to see pension funds getting in it's legitimizing, in my view.
Absolutely. Well, and what would interest them? What would interest a lot of these companies to move to blockchain? And I guess that's kind of the main topic of the articles that we pulled up today. Let's get into the interest rates, the Fed, the dollar, and would you
Yes.
say a bit of a decoupling with Bitcoin and the dollar? Was that part of?
Yeah,
Yeah.
that's right. This article right here is interesting. If you move down a little bit, there's a passage where there's an opinion piece by some analyst from, I'll figure out, find his name, section where it says focus on USD. So Nick Mancini, research analyst at Trade the Chain, he's noting that there seems to be an inverse relationship between the dollar and Bitcoin. So for Bitcoin to move up from here, there's a need for a weaker U.S. dollar, right? So it's an inverse relationship. Dollar goes up, Bitcoin would fall. Dollar falls, Bitcoin would rise. So there needs to be some dollar weakness, according to Nick, and that makes sense because we tend to think of crypto as like a hedge against fiat currencies and the risks associated with them, right? So why wouldn't people move into crypto as the dollar weakens? Well, so to kind of bring this to current events, I don't know if you've heard, but the last few months, inflation's been a big story. It's been kind of getting out of control. In fact, we have an article about that, how the CPI has just posted a number for May that's a 30-month high.
I'm on it
So
right now.
yeah, 5 percentage points increase in May. So basically the story is here that the inflation statistics are showing that inflation is becoming it's growing faster than expected, right? Now you might think, okay, well that's going to be cause for the Fed to want to pump the brakes. And in fact, they've hinted, that they're going to start thinking about raising interest rates and reducing the amount of monetary accommodation that they provide the market, which is another way of saying not print as much money or purchase as many assets as they have. Because all those purchases, they actually are just money creation. So if they purchase, they're increasing the supply of money, and if they sell these assets, they're reducing the supply of money. So the thinking is that if inflation goes out of control, the Federal Reserve will just restrict the supply of money by selling some assets, constrict it, to shrink the supply of money, and then bring inflation back down to manageable levels. But if you look at this Fed release that just came out, they had a meeting on the 16th this month. They're making it clear, if you go down to the part where it says the committee, they're saying essentially here that they're going to tolerate 2% higher, they're going to tolerate inflation running higher than the 2% target. And this is because they've had it run consistently below this long run goal. And they want to see it moderately above 2% for some time so that it averages out to be 2% over the long term. And the idea here is that they're basically telegraphing that they're not going to react to inflation going higher, and they're going to tolerate higher inflation than what their benchmark goals might suggest, right? And this kind of makes sense. I don't know if you remember back in 2016, 2015, really 2015, 2016, when the Fed tried to unwind their QE program that they started from the 2009 housing crisis, financial crisis. They started this QE program, and in the 2016-15 era, they started to unwind it, and they started to tighten and raise interest rates and sell assets and shrink their balance sheet. And the stock market did not like it. There was sell-off, there was losses, the market started to tank. And the pushback, the political pushback in the economy forced the Fed to abandon. They had laid out a roadmap to where they wanted to get us to where they wanted to shrink their balance sheet to, and they were not able to go all the way and do as many interest rate hikes and as many asset sales as they had planned because of all the pushback they got. So they had to abandon and go back to their accommodating footwork. They even rolled out another QE program, and essentially my takeaway from this is that the Fed learned their lesson. They understand that fighting inflation at this rate is probably not going to work, and that if they're going to really be able to commit to higher interest rates and truly shrinking their portfolio, it's going to have to be at inflation rates much higher than 2 or 3 or 4%. It's going to have to be probably, I don't even want to say because it's speculative, but maybe close to double digit, right? Before they have the political will in the economy to sustain those kind of policy changes, because it's going to be painful. And so what that means is that you can expect inflation to continue from here on, and that's probably, if this story, if Nick Mancini is correct about Bitcoin running in an inverse relationship, that means that the weakening dollar is bullish for Bitcoin and crypto in general. So that's just the big picture monetary story.
And that's pretty that's in harmony with PayPal and Visa and family offices and pension funds and endowments wanting to move out of traditional legacy dollar based investments and moving into crypto and blockchain where they can kind of protect themselves. I think Bitcoin and the digital asset space has been seen, is seen properly so as a hedge against any nation's monetary inflation, right? Now, maybe not so much stable coins. I'm sure it will have an effect on stable coins because they're tied directly to the value of the dollar. However, so you might take more stable coins to get a Bitcoin. But when it comes to Bitcoin and Ethereum and these other cryptocurrencies that are very popular, shucks. Chainlink, Grayscale just adopted 13 more cryptos. So it's not just Bitcoin, Ethereum, where the whole ecosystem is being adopted and embraced by a lot of these institutions. But absolutely, and like you said, you can see this is just another Fed policy of kicking the can down the road. Like, well, we're at 2% our target average, so right now we don't have to do anything because we can undercut it later. Which is, like you said, it's a telegraph, it's a signal saying keep the money printers going and don't worry about it right now, and which is good for crypto market, and that's actually what. This news, it's not the first time, it's not the last time, but I would say this is, part and parcel with cryptocurrency versus fiat, legal tender forms of money, right? Hasn't this always been said is that whether it's a Bitcoin or another crypto that's set to inflate at a specific rate, that rate can't be tampered with. You can't have a group come in and say, well, we're going to, because it's politically popular or for whatever necessity, we're going to print $1 trillion or trillions or billions, and we're going to control the rate of growth of money from this month or this quarter to that. It's very difficult for economic calculation from a business perspective or even from an accounting, but when you really can't count on what an interest rate or the rate of supply of money growth is going to be from 1 year, 1 quarter to the next, that definitely has an impact on economic calculation on the grand scheme of things.
Yeah, no, you're right. And then there's a quote too by Mises, I think, that's stabilization is chaos. And it gets to that point, is that this attempt to have arbitrary control of the money supply so that you can stabilize the value of the money or the business cycle or whether that or in full employment, they have various goals. But doing that creates this uncertainty about what the true value is going to be in the future, given policy, because you can't predict policy exactly. And then that creates all this chaos that is not necessary. Like there's enough to figure out, like, what do people want, or what's the cheapest way to produce something, or was there a better supplier, or can I make this product in a better way? There's 1,000 questions you have to answer when you're producing something or building something or producing for a market. And then you don't really need to have one of them be, what's the value of the money going to be next year, and how much interest rate, what interest rate do I need to pay on this, or pay or charge or demand to cover just to even break even, right? Or any of these kind of monetary questions. It just complicates the whole thing so much more.
Now, on a price note to end things, because people want to know, well, what do you think the price is, and we're definitely not a investing advice or price channel, but it's fun to think about the macro trends and perspective. Now, look, overall, you're having a lot of market analysts say after the recent sell-off, they're looking at bounded range from 41,000 to 29,000 in Bitcoin terms. Now, look, could it go below 29? Could it go to 25, 20, back to 20, 22 in that range on some bet? Sure, it sure could. But even from that, you're looking at not much more than a 20% drop from where it's at, right? Now let's go look at.
And then think about that. That would be Bitcoin crashing back to its previous all-time high.
Right.
Which still is, fantastic.
Right. But look, that would be like on the extreme end to go back down that low. Would be like almost a 20%, maybe close to a 30%, right? Drop. Yeah. But right now it's only 50%. It's all time high. So to retrace back to its all time high, that's 100% return. If you get Bitcoin now and it goes back, that's 100% return. So it's like we're already teetering on that. Sure, it may go down a little bit more, but where we're at in this range of crypto right now is a pretty solid play. I mean, a lot of other institutions, a lot of other people are saying, hey, you know what? We're okay to put in another $300 million right now. And you look at the overall value, the overall prices in the market. Like you said earlier, like we've been talking about, Bitcoin has had Taproot smart contracts. They're trying to do privacy layer and Lightning networks. Ethereum has Berlin hard fork, EIP 1599 implementations. The reality is that all the protocols continue to mature, continue to add value. And do most people feel that we've hit the peak in the very end of the cryptocurrency market, blockchain in general? Doesn't look that way. And do we feel like we've seen the final all-time high of Bitcoin or Ethereum? It doesn't feel that way or look that way either. I mean, I could be wrong, who knows, but overall I would say that would be a tail end distribution black swan event right there.
Yeah. I would say the bet as likely is the dollar just becoming ever stronger from here on forward.
A new model for fiat. A new model for fiat. We're to all of a sudden take
those two outcomes have about the same amount of likelihood in my mind.
Exactly. Well, you know what? I think that about wraps it up. We have some other good content videos. We do want to share the updates on our website, and we've got some exciting content to over the DeFi ecosystem to share with you guys and pump out. So don't forget to like, subscribe, and hit the bell if you want to get our updates when we do little last minute streams like this. But thought it was important to catch you up on the recent rebound. It's exciting to see a day of green after some consolidation, and we'll keep you updated with any more news. But there's always a little economic reasoning or some fundamental approach that we could look at behind the fervor and the excitement of prices in the short run. There's always like long run and long term motions, things happening in the background that we can always take time to take a look at. So enjoy these exciting prices, but also let's take a look at the big picture and see what's also happening. Yeah.
Well, look out for our next video. It'll be we're going to do a little tour of our website. It's been retooled.
It is.
We have all kinds of good stuff in the store.
We will take you through it on the next one. Until then, I'll say, look at that. Metrics, news, cryptocurrencies, storage, exchanges, gateways. I mean, it's a DeFi hub for sure. We look forward to taking you through it on the next one. Until then, I'd say namaste and have a beautiful day. I'll let you take it out, Ryan.
All right. Well, thanks for tuning in. See you next time.
Adios.